BlackRock Latin American Investment Trust is managed by lead co-manager Sam Vecht since December 2018 and co-manager Gordon Fraser since April 2025. They aim to generate capital growth and an attractive total return from a diversified portfolio of Latin American securities. The trust has an indefinite life, subject to a 2-year continuation vote. Performance is measured against the MSCI Emerging Markets Latin America Index. When required, the managers can draw on the extensive resources of BlackRock's Global Emerging Markets team. The IMF's growth projections for Latin America are superior to those for developed economies, helped by factors such as urbanization, the shift to alternative energy, and an expanding middle class, which is driving demand for premium goods and services. However, Latin America has been out of favor with global investors and the region represents less than 10% of the MSCI Emerging Markets Index. As a result, Latin America is very attractively valued on both an absolute basis and compared to other markets. While the benchmark is dominated by Brazil and Mexico, Vecht and Fraser regularly invest outside of these markets, including in countries that are not in the index such as Argentina and Panama. They consider that the best way to make money in Latin America is to be patient, invest for the long term and away from the crowd. The managers seek companies that have positive fundamentals in terms of good long-term earnings growth and cash flow generation, robust balance sheets and well-regarded management teams, and which are trading on reasonable valuations. The resulting portfolio is a high-conviction fund of 30 to 50 positions across the market cap spectrum, although investee companies are generally larger than $500 million to ensure there is liquidity if a position needs to be sold. Since July 2018, quarterly dividends are paid, equivalent to 1.25% of the trust's calendar quarter-end US dollar NAV. This policy aims to help narrow the trust's discount by making it more attractive to income-orientated investors. Distributions can be paid out of income or revenue and extensive capital reserves, ensuring that the managers are not forced to seek a higher portfolio yield, which may be at the expense of capital growth. The board employs a discount control mechanism aiming to reduce discount volatility, favoring a conditional tender offer rather than share repurchases. Subject to the biennial continuation vote in 2026 being passed, a 24.99% tender offer will be triggered if the trust's annualized NAV total return does not exceed that of the benchmark by more than 50 basis points per year over the 4 years ending on the 31st of December 2025, or if average share price discount to income NAV exceeds 12% over this period. If you would like to find out more about BlackRock Latin American Investment Trust, please visit Edison Group website.